What's going on, everyone? Hope you're all doing well. My name is PawarTrader, and today we're going to look at another supply and demand trading video. This video was actually inspired by one of my followers on Instagram. He messaged me and he was like, can we just do a quick little call? Can we just talk about trading? And I was like, yeah, let's do it. And he explained to me he was having trouble looking at different supply and demand zones. Have you ever been in a situation where you draw a zone, but that zone doesn't even hold? Have you ever drawn a zone and it doesn't even get mitigated? Like, why is this? Why does this keep on happening to you? What are you actually missing? What could you be missing? That's what we're gonna go over today in this video right here. So stick around to the end, and hopefully by the end of this video, you will have learned something. So let's get straight into it. All right, everyone, so here we're on the Euro USD 1 hour chart. And what can we see? What's the overall market structure? Is it bullish? Are we creating higher highs and higher lows? Or is the market structure bearish? Are we creating lower lows and lower highs? As you guys have probably already guessed, the market structure is bearish. If we zoom out, we can see that price has been creating lower lows and lower highs here, right? We saw that there's a lower low, a lower high, a lower low, lower high, and another lower low. So now that this lower low has been created, we can look for another lower high to get created and then carry the momentum towards the downside. Hope that makes sense. So when I was on call with one of my followers, he showed me that he'd drawn these two supply zones. This one was the first one right here, and the second one right here. So I'll show you guys what actually happens in the market. Let's say you want to enter off of this zone. You might decide to enter off aggressively right here and keep your stop loss at the bottom here, and this gives you a 2.5 to 1. If you aim down, you get a 3 to 1, 4 to 1, maybe even a 5 to 1. And let's see what the market does right here. It takes your stop loss, right? So now that you're down 1R, you're thinking, okay, my stop loss has just been taken. What can I do to recover from this? Just go to the next zone up here. So let's say you kept your entry over here, your stop loss here, and your take profit down here. Let's see if the market actually triggers you in. It doesn't trigger you in, it just keeps going down. So why does this keep happening, guys? Sometimes you draw the zones and then they don't get mitigated, and sometimes you draw zones and they get absolutely obliterated. And this keeps happening again and again and again. So what can we do to avoid this mistake? Well, first we need to answer the practical question. Will you be able to avoid this mistake 100% of the time? And the answer is actually no. You won't be able to avoid this mistake all the time, because the market doesn't care where you've drawn your zone. Just because you've drawn a zone doesn't mean it's going to get mitigated. Just because you've drawn a zone doesn't mean that zone's going to hold. The market does whatever it likes, and you're never going to have 100% success rate with anything. So you have to let that first thing sink in. And a lot of you guys are probably thinking, yeah, I've got it. I'll let that sink in, no problem. The amount of people I've seen getting frustrated time and time again because, the market's not doing what I thought it would do. The market's not reacting off of this zone. The market doesn't give a bro. It does not give a Let that sink in, number one. I'll give you 5 seconds to process that. Okay, now that you've understood that, let's get into how we can avoid these mistakes. So firstly here, we can see that this person had drawn two zones. There was one zone right here and one zone right here. Now, when you're trading, especially with supply and demand, you need to understand that discounted and premium prices are very real. When you're selling, you want to be selling something that is premium. Premium means that it's really costly or expensive, right? If it's expensive, then it's a good thing to sell. If it's discounted, then it's a good thing to buy. So one way that we can identify discounted and premium levels is by looking at the Fibonacci tool. So we can pull the Fibonacci from the high to the low, and if we pull it right here, we can see that these zones are on different Fibonacci retracement levels. This zone right here is on the 618 level, whereas this zone right here is more close to the 886 level. So which zone is better? Is the 618 better, or is the 886 better? Technically speaking, the 886 zone is a lot better because it is more premium. And the reason behind this is, as a market maker, you want to be collecting as many stop losses as possible. If we have this zone, then that means the market makers can only collect the stop losses in this region here because they're pulling up into this zone right here. Whereas if price pulls into this zone, then that means it gets to collect all the stop losses between here and here. So the more the market moves into the deeper and premium zones when we're selling, that means the more stop losses are going to get taken out, and that's what the market wants to do. So when you see two zones, one which is at a premium zone, 618 is still premium, and when you see another zone that's at an even higher premium zone, which is the 886 in this case, that would mean that this zone is stronger than the 618 zone, simply because it is more premium than the 618 zone. So once you understand that, you can see that you could have avoided this loss right here. In some cases, yes, the 618 is going to hold well and it's just going to reverse down, but in most cases, price does like to retrace into those deeper supply zones. That way they can collect more liquidity and then move the market in the direction that it was supposed to go. However, in this particular example, we can see that our premium zone didn't even get mitigated. As you can see, this wick came close, but no, it didn't even get mitigated. So what can we do to still catch the move? Step 1, go to the higher time frame, and step 2, just do step 1.
Oh my God, bro. Oh, hell no, man. What the man?
So we're here on the 1 hour time frame, and let's go to the higher time frame. Let's go to the 4 hour. What can we see here? Here on the 4 hour, we can see that there's a nice doji candle. What if price doesn't come into this zone? What can we do to avoid this mistake? Go to the higher time frame. So now I'm going to go to the 8 hour time frame. What can we see on the 8 hour? We can see a nice 8 hour candle right here. And as you can see, this is so simple. We didn't have to worry about the Fibonacci tool. We didn't have to worry about the 886 level. We just went to the higher time frame and we marked out this whole last zone. And what can we see here? Price came into the zone and then it reversed off. As simple as that. You don't even have to think about it for a second. It's right there for the taking. So how can you actually catch this move? You could enter off of the edge of the block and keep your stop loss here, and you could keep your TP here, but that gives you a risk to reward of 1.21 to 1. And I'm sure a lot of you guys are probably sitting there thinking, I'm not going to take a 1.21 to 1 reward to risk ratio. That's just not me, and I completely understand. That's why I'm going to show you another way to enter off of a zone like this. On the lower time frame, we can see this. Right now I'm on the 15-minute time frame. Price comes into the zone, creating higher highs and higher lows. And once it reaches there, it starts to range. It starts to range between this high right here and these lows right here. And then eventually price breaks and then it continues towards the downside. So how can we find an entry here? We want to see a shift in market structure. So let me show you what I mean by that. If we have a supply zone and our risk to reward isn't going to be very good, what we can do is simply wait for price to enter that zone, and then we can wait for a low to get taken out. If we can see a previous low get taken out, and that means we can enter off of any supply zone here, providing it's there to actually take, and then we can catch the momentum towards the downside. So what that does is it actually increases our risk to reward ratio by quite a bit, and I'll explain what that is in this example right here. So here we can see that price is sort of trending upwards, higher high, higher low, higher high, higher low, and then once we get here, we start to sort of range a little bit. If these are the last 3 lows that were printed, and that means all we have to do is wait for these 3 lows to get broken. And once they get broken, it's a good indication that price is ready to move over to the downside. You can't say anything for sure, obviously, but it's a good indication that price can move towards the downside. It's a change of character in price. So when I was looking here, this is what I saw in the market. We saw that price was ranging right here, and then we see a nice break of structure. And when we break this, all of these 3 lows here got broken. So where exactly can we find an entry right here? So when I was observing the market here, what can we see? We can see that there's a nice bearish move right here. Then we get 2 equal highs. And if you've watched my videos before, you will always know that I look at equal highs as liquidity. We saw that these 2 equal highs both got liquidated right here. So what I mean by that is a lot of people would be trying to sell on these lines right here. Instead, what price does is it takes all of their stop losses and then it moves towards the downside. So this is why this supply zone right here was valid for me. So how do we mark out the supply zone? We mark it out by essentially looking for the last up move before the huge down move right here. In this particular case, it's going to be this 15-minute order block right here. And we can set up our entry right here. And this now gives you a risk reward ratio of 7 to 1. I will say when I entered this trade, I actually kept my stop loss a fair bit above. I kept it at this zone right here simply because there was a little bit of imbalance here. And if price would have come up to take out that imbalance, then I wanted to make sure that my stop loss was safe. You could keep it here or you could keep it here. That gives you a 7 to 1. And let's see what the market does right here, guys. Does price mitigate us in? It does. And it hits TP eventually, I'm pretty sure. Let's see. There we go. Right there. TP is hit. Entry is secured, and I hope that makes sense, everyone. So what did we talk about today, guys? We talked about how to find the correct supply and demand zone. Sometimes we have a premium zone. Sometimes we have a not so premium zone. One way you can counter that is to look at the overall higher time frame structure. And once you get that higher time frame structure, once price mitigates, all you have to do is wait for a break of structure on the lower time frames. And once that occurs, just find your premium entry and aim for whatever you want to aim for. And in this case, this gives me a 3 to 1. Yes, it's not the best risk reward ratio. I've had trades where I've gotten 10 to 1, 11 to 1, 5 to 1, 8 to 1, whatever. But a 3 to 1 is definitely more rewarding than, doing this and getting 1.27 to 1. It's barely anything. If you're happy with that, go for it. That's completely fine. That's up to you. Personally, I like to look for trades that are at least 3 to 1. It's just what I like. It's my own preference. But yeah, hopefully that makes sense. If you've made it this far in the video, make sure to check out my Instagram page. I'll be posting a lot more educational content on there. My exams are about to finish and I'm going to start posting a whole bunch of reels. So hopefully you guys will see them. And if you have any questions, make sure to send me a message there as well. If you want to trade like this, or if you already trade like this, let me know in the comment section below. If there's any specific video that you guys want me to make, let me know in the comment section below, and I'll see you all next time. Have a good one.